Everyone, Lifestyle International Realty, welcome, welcome, welcome. I want to introduce our really great friends and partners from Surepath Lending that's going to bestow a wealth of knowledge upon us in terms of financing, mortgage, and everything else. We really appreciate our partnership with Surepath Lending and the things that they do to support us, as well as our company and our agents. Before, after, during, feel free to ask them any questions. Let's make this a fluid presentations. Let's give them the opportunity to get to know us. And also don't be shy, right? If there's anything that you want to ask, any questions that you may have in terms of like lending, interest rates, the economic forecast, all the great stuff, lottery numbers, anything, just ask them. They'll be able to tell you. But with that being said, let me give the floor to our great friends and partners from Surepath Lending. George wished he could be here, but he's caught up on another meeting, so I'm his handsome replacement. But everyone, have a great time.
All righty. Just to get us started, thank you, Irv, very much. And we want to express appreciation on behalf of Surepath for the opportunity to get in front of you all and explain how we're here to assist you all in getting your deals closed. We know that the mortgage lending and real estate professionals, there's a lot of moving parts in getting our clients to the closing table. And so we want to be here to discuss mortgage mastery and how we can set proper expectations for our mutual clients, as well as sellers and buyers on the real estate side. And we know that our job is to help you all be successful, and inevitably we will do more work with you all by doing so. We want to aid you in not just transactions with us, but how you can work better with your other lenders or partners as well. So to get us started, no further ado, let's turn our attention over to Jason. And if we can have access to the slide deck, we will go ahead and get started.
All right.
I'll wait till it launches, B.
You guys see it?
Yep. Can everybody see? Good. All right. Let's put it to the right slide.
Yeah. There we go. Apologies.
No, you're good.
I didn't know I was driving initially.
All right. Hit slide two. We'll be good to go. And I'll, all right, folks, I've got real limited time, and outside of Irv really liking this, we've got kind of similar backgrounds on the upside. I get the boring stuff. So I promise you I'll run through this quick, and any questions you have, please, don't stop me. Stop me. It's not that formal. So we tried to put this into 3 different bullets from kind of 2026 landscape, and doing this in a couple of minutes. It's like you explaining your business for 2026 in a few minutes, right? It's really, really high level, but please ask questions. So everybody's question is on rate. Best I can tell you right now, I would say predictability is back, right? So rates have settled in that 5.875 to 6.5 range. We've been seeing that, over the last 30 to 45 days. Obviously, the strength of the borrower, loan level price adjustments, stuff like that we'll hit on, moves that needle a little. But what we are seeing, buyers are moving forward a little bit more with a little more confidence. The new Fed head was announced that will come in May. He's got a solid background. We'll touch on that. Government probably looking at kind of some big bang stuff in Q2 that's going to move the needle. So right now, if anybody tells you this is what's definitely going to happen, they're lying, right? Because at this point, this thing, I think outside of the volatility every day, we're starting to see that, predictability, which is a good thing when we're touching mortgage. The second one here is structure, right? So what we're touching on here is structure matters more than rate at this point. So product selection, your conventionals, your FHAs, VA, non-QM, right? We've got 40 different programs out there, but credit score and pricing adjustments we're seeing can materially impact that payment structure, especially today. And we'll hit on it a little bit more on debt to income and why that matters. Credit quality, again, credit quality is credit quality, and everybody, it. Somebody walking in with a 600 credit score and an 840, big difference on what we can do. However, the great thing is there's programs out there that have come back into the market that basically comfort every borrower that's out there. So we've got about 22 investors that we do business with, and we're seeing a lot of people out there doing a lot of new products like we had 5 to 7 years ago. Stability, right? Really, really, really important. We've been experimenting on this in the last 2 months, and Ben is going to hit on this at the end. But seller concessions, buy downs, strategic structuring in this environment is moving the needle. And when I mean strategic, it means Surepath has specific programs out there, especially for the listing agents on the phone, that we're essentially putting a point up out from us as a gift back to your borrower, or the ability to move their property that is not moving on that market right now. We've been testing this in Pennsylvania as well as Texas, and we're starting to get about a 40% penetration on a group of people we never had penetration on before. So it's working and it's assisting, but Ben's going to hit that a little bit later. I'm going to take my slide and ask for questions, but the next one that we want to hit on is what we've seen a lot of as well. And a lot of agents pushing back to us saying, hey, the pre-qual versus the pre-approval. I want to make sure everybody understands that. And for those folks that have been out there for 20 years and doing this, they know a best way as far as dumbing this down in 2 bullets, a pre-qualification tells you what a borrower says they can do, right? Where a pre-approval tells you, or basically tells you what they're proven they can do. Meaning that a pre-qualification, when somebody comes out and says, hey, I'm pre-qual for $500,000, please understand there are basically 3 things we look at. Documentation. Has that borrower verified the documentation saying they make $500,000 a year? Pre-qualification, no. Pre-approval, yes. Credit reviewed. Usually a soft pull on both. At times you'll get a hard pull off your pre-approval. Underwriting review, a pre-qualification, no. Nobody's verified what that person has stated to you, right? My stated income is X versus a pre-approval where an underwriter's looked at it and said, no, we verified this is accurate. Now, why does that matter? A lot of folks that are walking into open houses, a lot of folks that you on the buy side walking into others, first thing, and I'm married to a realtor, first thing they ask all the time is, you pre-approved? Well, no, we have a pre-qual. Excellent. Not going to stop you coming in. But if you got 5 offers on the table, you've just disqualified your borrower. Generally, we're all human. It happens, right? And from a pre-approval, we do everything here on a pre-approval. We can get it to you in hours. So if you say, hey, I'm going out on the weekend on a Thursday or Friday, I need a pre-approval, we'll walk through it, get the person pre-approved and letter in hand, right? And it matters. Seller confidence, does it matter? Seller confidence on a pre-qual is low. Seller confidence on a pre-approval is high, right? We all know this. It matters, but when the rubber meets the road, get a pre-approval. Offer strength, the same thing. Weak versus strong. Rising impact to debt to income, and I apologize, guys, I'm walking through this quick, but we'll definitely have some questions. What we're seeing on debt to income, right? DTI is debt to income. There's a ton of debt to income pressure. And it solidifies what we're seeing now versus what was announced on Fannie and Freddie back in the end of Q3, beginning of Q4, which was, it's the kind of the first time ever where when we look at principal interest, tax insurance, and then in some instances HOA, you've got over 40 to 42% of people now defaulting on their existing mortgages, even with low rates, based on the latter, not principal and interest, but their tax and insurance and HOI is driving, in most instances, those folks back into delinquency. It matters. So with insurance premiums rising, the qualification margins, tightening, a $100 to $200 difference here is killing deals, and we see it every day. We see this all of the time. So if your client is shopping at the top of the approval range, insurance, taxes, and HOA, they're not small variables anymore. They are truly hitting stuff, which is why the programs that we're offering here that Ben will go over, if the $200 to $300 back end on the insurance and taxes is killing that individual and going forward, we can generally make it work on the principal and interest based on the programs that other investors have developed and that we bought in with, right? So it matters a lot. And the key, validate the numbers early. Don't not walk with your borrower to anything without a pre-approval. See what they can definitely afford and walk them through it. For me, guys, that's it. At least I don't want to bore everybody with numbers. I could do this all day. And outside of Irv really liking this, I know it can get this stuff runs into each other. What I did, and I'm not going to go over a lot here, guys, on the right-hand side. For those of you, I showed it last month to a group of folks here with lifestyle, but this is a view or a high-level view, which I think is interesting. You can take it yourself here, and we can send this out to you from 2006 to 2025. Right? When you as an agent are looking out there, and we don't expect you, just like you don't expect us to know your business that way, it's good to know generalities. The 10-year treasury is your friend, right? So if you're watching something or monitoring something on rates and want to look at it quick, the 10-year treasury, for example, 4.29 in 2025, that 4.29, if you subtract it from the 6.25, you get about a 1.96 to 2 points. In general, the 10-year treasury, add 2 points to it. So if you're at a 4, your national average is around a 6, right? And that's kind of the way we look at it. We monitor this stuff by the hour here. But at the same point, what does 2026 look like? People are saying 5.75 to 6.5. If things happen like they say they're going to happen in Q2, the capital markets groups out of New York are going to start hitting this in April. You will see adjustments in May, but big impacts in June. Now, if they walk out and the government does what they say they're going to do because it's an election year and all this other stuff, you could see rates in the low 5s. Nobody at this point is coming out with that, but the chatter on the side and all the boxes that we watch on capital markets is that 5.75 could easily be a 3-year or a 3% 10-year treasury around a 5% mortgage rate. If that hits on that type of basis point hit or a couple hundred basis points, you're going to see a ton of movement and you're back to a seller market, but you're going to see a ton of movement because we're not going to be able to see that now for the last 3.5 years. And there's about a 1.8 trillion they set on buyer for 2026, and that's what they're looking at. So that's good for us. I know that was boring, guys. I apologize. They always stick me first so they can end on a good note and not boring with numbers. But is there any questions, high level, low level, anybody at all on anything I hit, anything you're seeing?
Feel free to speak up.
It's okay. If not, email or anything else, and we can send that over or can as well for contact. And I apologize to anybody. Some of this is 101 stuff. Some of it may not be, but again, any questions, we're here for you. And I appreciate the time. Ben and Danielle, I'm going to hand it back to you.
All right.
Alrighty.
So I'm gonna step in and take over the rest of these slides here. So appreciate your time, guys. And my name's Daniel Sweeney. Been in the mortgage business for over 25 years. So just a little bit about me. So what we're going to go over is kind of the seller's perspective and a little bit deeper dive into kind of what is presented on the offers there and how a solid lender and a solid pre-approval can help you win the deal, especially when it shifts over into a seller's market. Right now, I mean, it is a buyer's market, so you have a lot of flexibility and a lot of kind of control. But when this market does shift, and it eventually will shifts back into a seller's market, you're going to have the constant bidding back and forth. You're going to have multiple offers. So, it's all about putting your best presentation forward and having a partner that, identifies that and understands that part of the business. And, we're here to assist with that. So, what I kind of wanted to go over is the seller's perspective. So reading the offer. When you submit an offer over, a good loan partner is going to be, included on that email with the offer. And as soon as I see it come through, you're the first email, mine is the second one. And then I'm following up with a phone call. Hey, just wanted to introduce myself. My name is Daniel Swaney. I am, we have Mr. and Mrs. Smith. They're pre-qualified. Kind of wanted to talk to you and make sure that you didn't have any questions, your sellers don't have any questions, and kind of go through and re-encourage them that we're solid. We've been through the loan approval process, and it's not just a pre-qualification, and kind of go through all the pitfalls and things like that normally just get swept under the rug, and an offer just goes over with no communication from a lender's perspective. And that's part of building a lender reputation. Okay, so I mean, there's thousands of lenders out there, and we're all, not to, downplay anybody else, but it's your reputation is what it is. So if I'm putting my name on it, it's going to get done, and the communication has to be on point. So I mean, there's a ton of lenders out there, that are offering super low interest rates. Your 1-800 number, your call centers. I mean, I worked in a call center for years. So, managed a team in call center. So I understand when, they have 1,000 loans on their plate, their communication is not going to be the same as someone who has a reputation and is working with you guys to try to make you look, put the best foot forward. So, being a solid partner for you guys. A down payment and skin in the game. So this is really a big one. When you're talking to a borrower and getting them pre-qualified. So you have a lot of people, all right, how much do you have? My first question out is how much do you have available to put into this transaction? Just so I have an idea of what their thought process is. A lot of them, most common is 10 to 20,000. Perfect. Where's that money coming from? And that's a key, because if I just say, all right, well, we've got $10,000 to $20,000 to work with, and I just go on with that, and we get to closing, and the money's coming from, had to sell a car, or I moved some cash from under the mattress, bought it out of the safe. I mean, there's a thousand things, and to be honest with you, I've had that happened many times. I've had artwork sold. I've had cars sold, gold, cash. I had someone show up to a closing and literally had $5 bills, stacked up. And I was just like, all right, well, that's not going to work. So it's all about taking the extra time up front, making sure that the client understands this is what's going to be required. These are the documentation. This is the file flow that we have to have, and get all of those questions answered with them. So if there is any kind of money that needs to be moved or sold, or the transaction, we handle that up front, so we know that the cash will be there and available, and there's no issues at closing. All right, kind of skin in the game. So everybody always says, well, minimum down, and that's great. There's a ton of programs that are out there that are minimum down, 5%, 3.5%, 3%, first time home buyer. But for example, I've got a client that's actually closing next week. Horrible credit score. She went through some tough times, had multiple late payments on her current mortgage, was selling that house and had to downsize. But because she had a healthy down payment, even with the lates on the mortgage and the very low credit score, we were able to get that done just because she was able to put a little bit more money down than the minimum and make those numbers work. So, it's one of those where having that asset conversation and the down payment conversation up front is very key. So, we like to make sure that everybody is well aware and comfortable with what needs to happen to make the transaction successful. All right. Verification level. All right. So kind of spinning off on, what Jason said. So, making sure that everything, the income and assets are verified. It's been through an underwriter. Somebody that's a W-2 employee, when they say, all right, I make $100,000 a year, that's pretty easy. All right. But, the next question is, all right, what type of income do you have? Is it commission? Is it base plus bonus? Is it, any kind of variable income? If there's variable income component, then we need to show a history that it's likely to continue and stable. So, these are all questions and things like that we have to have with the consumer upfront, and to continue to kind of like pull that thread. When you get into borrowers that are self-employed, and this is a big one. Most people that are self-employed are kind of have that business acumen, and when you ask them the question, it becomes a little bit of an ego stroke. Well, I made $500,000 last year on my tax return. But when I look at their tax return, to make that 500,000, it costs them 300,000. So the net number is going to be 200,000. So these are things that is could potentially blow up a deal in a pre-qualification versus a pre-approval. So if I have a borrower go on, they fill out an application, they're self-employed, and they say they make X. But when I get the actual documentations in, it's Y. There's a lot of shuffling that has to be done to get that borrower approved. Any questions so far? No? All right. Okay. So offer to the listing agent. So this is kind of the pro tip. This is I touched on it a little bit earlier. Once we see an offer go out, the best thing to do, and I'm sure you guys have had calls from you know mortgage companies that you guys have had listings on, and it's really that extra little touch to make sure that lets them know, hey, number one, it saves them from having to make the phone call to us, but also kind of gives them the peace of mind. It gives them the confidence in us. Hey, I identify as a professional in this business, so I'm going to reach out to you. I'm going to be upfront. I'm going to be transparent on the transaction. Here's where we are with the borrower's pre-approval, and here's just kind of give them the warm and fuzzy. I try to upsell the borrower as much as possible, upsell the transaction. Hey, we've already been through underwriting. It's really just kind of inspections, appraisals, title work. We'll get it closed. So that's really the key, and that helps out quite a bit. When I'm able to be pulled into that transaction. All right. So beyond the numbers, so strong offer isn't just about the highest price. It's about making sure that you've got a lender that's going to be toting the chain with you, and making sure that it gets across the closing table, because that's really what everybody wants. Is just to make it to the closing table without brain damage, and make it on time. Any questions? All right, moving along. All right, so appraisal gaps and strategies. All right, so in a rising market, if we start to see, when we start to see, in a neighborhood, just for example, it's better for me to talk in examples. So if you have a $450,000 neighborhood, but in a buyer's market, that number tends to be chipped at. Everybody wants the best deal in the neighborhood. So, you have a house that ends up they're under a pressure sale or what have you. They want to sell for 410, and they're absolutely fine with 410. So now that 410 is a solid comp for the neighborhood. All right. If another one goes around that 410 to 415, now you've got a balanced comp package for that area. So regardless of what, the 450s and things like that, now those have moved down to the 405 or the 410 range. When you start to see, the market improve and prices start to go up, that data, so appraisals work on post data. So what that means is, they're working on what has sold already, not what is going to sell. So, even though the market demand has pushed that house value up, the comps still they're going to slowly move behind that push. So in a seller's market, you do have issues with, sometimes the house will not appraise. This is where the conversation, going back to when you're having that conversation with the borrower in a seller's market, a good loan officer should be having that conversation. All right, here's, where you are. Here's what happens if the house doesn't appraise. In the mortgage industry, we can only use the purchase price or the appraised value, whichever is less. Okay, I'm gonna say that again: the purchase price or the appraised value, whichever is less. So, the house appraises at 450, and our contract is 425, and they're doing a 95% loan. Then our 95% is off the 425. That $25,000 equity doesn't exist in my transaction. Great for the borrower, great for the buyer. Doesn't exist in my transaction. Transversely, if we're buying at 450 and the house appraises at 425 and as well supported at 425, and there's no way that we could get it, to 450, my 95% loan is off that 425. So either that loan has to be, the couple of things can happen. It can be renegotiated. They can walk away from the deal, or the borrower has to bring in that difference. So in addition to their 5%, now they've got another 25,000 that they have to bring in. Okay, so that's kind of how that works, and that's in a seller's market where you start to see, home prices run up. I mean, we ran into it in 2020 and 2021. We were getting in contract offers, and there was absolutely no way these houses were going to appraise. So, but people were coming in with cash because they sold a house for way more than they thought they were going to get. They just parlayed that cash into the next house. So it worked in that scenario. But when you're on a slower incline with home prices, you might start to see, $10,000 gap here, $5,000 gap here. And it's just something that, either gets worked out with the buyer and seller. But those are all conversations that need to be had, up front. So the seller, has an idea. Okay, I'm sorry. So the buyer has an idea. All right, here's our plan of action. If the house doesn't appraise, X, Y, and Z needs to happen. All right. Any questions so far? All right. So as is, somebody say something? No? All right. Maybe my headset. All right. So as is with right to inspect. All right. So you shift the inspection mindset, use it for informational purposes. So from a lending perspective, an inspector, inspector report goes in and they're tearing the house apart. That's for the buyer to let them know anything and everything that's wrong with the house. The appraisal, yes, it is an inspection. Yes, it can, bring up some stuff, but mainly they're looking for safety and health. All right. So depending on the condition of the house, may or may not be, the inspection or the appraisal itself, we may have to shift it to a better loan program. So for example, an FHA loan, they are a little bit tighter as far as like holes in the walls and things like that. Conventional loan, they will let some of that slide. All right, VA, they're probably one of the tightest on inspections, but it's mainly if you look at it from a health perspective. So what the idea with both FHA and VA is that they don't want the borrower coming in, and because they're typically first-time home buyers or veterans or what have you, they don't want them to come in and have a boatload of issues with the house. So they're looking at safety concerns, chipping paint, rotten wood, steps with railings and things like that. Those are all the main issues with VA and FHA. FHA not so much on the railing. So sometimes it's if you have a borrower that is going with a specific loan product, there's going to be issues that you will want to take a look at and bring up to your loan officer. Hey, I noticed, this house has got this kind of damage on it. What do you think? And then, we can't immediately say, hey, what's, what the appraiser is going to note it or not. We don't know for sure. But if it's something that's blatant, then we can give our input on it and hopefully rectify it before the inspection goes out there. All right. And so that's kind of touched on this. So you got to match the loan to the property condition. All right. Conventional loans and non-QM loans, they're going to be the most forgiving on your appraisal reports. And, FHA, VA, USDA, they all have, because those loans are geared for first-time home buyers, they're going to be a little bit more cautious with kind of the maintenance and safety issues. So busted outlets, any kind of exposed electrical, making sure all the appliances work and are operational. So that's kind of what that's for. Any questions on the last slide? All right. Okay, so communication is key. So this is we kind of adopted here in our office the 24-hour rule. So time is a deal killer. So as soon as I have information, I need to be sharing it with all of my partners. Not that I don't have a solution or we're not working on a solution, but it is imperative that everybody is aware of every situation. Okay, so and a pre-approval. You guys send over somebody that needs to get pre-approved. Thank you for sending the referral. I will get connected with them, and if I have any connection with them, any issues getting connected with them, then that's my communication to you. Hey, we connected. She's gathering all of the income docs for me. All right, and it's all about making sure as soon as I have new information that I'm updating all of my partners. So from pre-approval to loan submitted to appraisal being ordered to anything and everything. So we have certain systems in place through our origination software that will notify you as a business partner. And then, so as the loan gets submitted into processing, you get an alert. As the appraisal gets ordered, you get an alert. But it's also my job as a loan officer to make sure that communication is coming from me. Hey, here's what we've got. We've got the appraisal has been ordered. Just wanted to make sure that the inspection passed, and do I need to put that appraisal on hold because there's some issues that came up on an inspection or something like that. So these are all the things that we make sure that we're touching base with you because you're equally as even though this part of the process, once a house is under contract, the majority of the work is on our side of the fence now. You guys have to be well aware. I don't want you finding out something from the consumer that went on with a loan file. I should be the one letting you know what happened or what was addressed or kind of the direction that we're going. So communication is key. So
can I interject for a second, Daniel? And that's why we have these 24-hour rules put into place. You call me within 24 hours, you're going to have a pre-approval if the person qualifies. Once we have an application, that they will have that disclosure within 24 hours. Once that disclosure is out and they sign, that appraisal will be ordered in 24 hours. And any milestone communications, Daniel mentioned the software that we operate with a smart software. So as a partner, I'm going to add you as a partner on that particular file, and you'll get updated as we get updated. Doesn't mean we're not going to communicate with you, but you'll be alerted. Appraisal has been ordered. Appraisal has been scheduled. Appraisal is due back. File is an underwriting, things of that nature. So you don't have to ask those questions. You'll know it's happening, and the communication is always there, and that's to add to the communication that we're going to give you. And if you notice down there at the bottom, it talks about the good, the bad, and the ugly. I have a rule as being a mortgage real estate person, a mortgage loan officer, that bad news needs to be delivered before good news. So anything that pops up that could throw a wrench in what we have going on, then I need to let you know ASAP and let the borrower know so that we can rectify the situation if it can be rectified. All right, Daniel, back to you.
Man, you stole my thunder.
Okay, my son. Sorry.
No, I mean that's it. And so kind of what what we also do is the free second look for a competitive edge. All right, so we know we're new and trying to build a relationship with each of you guys, and we know you have lending partners out there already, relationships that we have to prove ourselves worthy of to be able to get your business. But what we want to do is kind of present that out to you. Look, anybody that has already been pre-qualified. Or anybody that needs a second look, if you got a turn down, or somebody's not giving you clear answers on what what this borrower qualifies for, give us a call. I mean, we can look through everything. I mean, we're all very well seasoned in the mortgage industry, so we can easily jump into a file and say, all right, well, this, these look good. These are concerns over here. And this is how I would address it with the borrower. We'll absolutely do that for you. A second piece of it is, if you are, the borrower is already pre-approved and obviously don't want to, upset the apple cart and get pre-approved with multiple lenders, give us an opportunity to shop their loan estimate. So when they do find a property, when they do get it under contract, let us shop that rate for you. We'll fire off an estimate of what we could do, and you can take that, present it to your lender or to your borrower. Say, look, this is what my preferred lender can do. They can take that. They may be able to renegotiate something with the deal that they have. We get the loan. We don't get the loan. It doesn't matter to us. Well, I mean, it does matter. We would love the loan, but in that scenario, it just makes you look good as a real estate agent, because you're looking after their interest first. So, we can put out a competitive bid, and if it gets, someone that they're already pre-approved with, if it gets them to sharpen the pencil and get a better deal for the consumer, then great. All you've done is created a win-win situation for your borrower. So, that's really all I have. Any questions or concerns? All right. Take it away, Ben.
All right, if you pull up that next slide, the Alliance Advantage, the SPLLIR Alliance Advantage.
All right.
We talked about it briefly, and I'm going to shoot through this very quickly because we've been here a moment. But we talked about that. What is an ally? Someone who's a friend, someone who likes to assist, or who is willing to assist. And that's what we want to do. We are well aware that there are multiple lender partners within LIR. And we don't expect to get 100% of the business of the people that we work with. But what we do want to do is aid you all to become as successful as possible, because your success inevitably helps us to grow with you and help you become more successful in the long run. Is the slide up?
Yeah. Can you see it?
No, I see the 24-hour rule. I'm sorry, you all. Does everyone else see it?
That work?
No, there it is.
Okay.
All right. So we talk about direct access. There is no gatekeepers. You have my cell phone number. You will have our loan officer's cell phone numbers. Your clients will have our cell phone numbers. It's not a CSR that you have to wait to respond. It's not a bank that doesn't pick up on the weekends. So it's very important that we make ourselves available to put into action the things that we're talking about, that Daniel and Jason talked about earlier. Weekend warriors. You all spend time away from your families. You all drive. You all work in the evenings because you have to be accessible when your clients are accessible. So what we promise to you is we're going to work weekends with you. If you need an approval letter, then give us a call, and you need to get an offer in quickly. Then we will make someone available to get that done for you so that they don't miss out on an offer. And you don't miss out on a potential commission, because that's how you take care of your families. And so we want to be there for you. Total transparency. When we have a file working with you all, then we will communicate on a specific time every week, usually by 2 p.m. on Tuesday. We have our pipeline meetings with our different teams on Mondays. Then we'll see what's going on in underwriting, and then we'll have a status report, if you will, on Tuesdays by 2 that all your files will be communicated with. And that's in addition to the SMART information that will be provided to you when we add you as a partner on the files that we're on, where you're automatically communicated with. How do we start today? Even if we don't have a loan with you, Daniel touched upon it. The second look audit. We have people that we've been able to help that have been denied. How are we able to do that? Because we make sure we have investors in place that underwrite strictly to Fannie Mae guidelines. No overlays. Now, you may ask, what's an overlay? It's something that different investors or mortgage companies put on top of what Fannie Mae says to make themselves feel more comfortable. And therefore, if this person has a 607 credit score, we're going to make that where they can't go over 45% DTI on the back end. Well, that doesn't have to be in place necessarily. So we look for ways, and we make sure that we have investors in place where we can take care of the clients where somebody else may have denied them. And so therefore you can still help someone get into that home and solve an issue for them. Listing support. Any listing that you all have, you give us a call and we will help promote that listing. And I'll touch about that a little bit further in a flyer down the way. Vetting services, text me your offers. We will help you find what the best offer is, whether we're doing that loan for you or not. And the reason that's important is, once again, we are an ally. We are partners. Mr. Canciobello and Mr. Cham have allowed us the opportunity to be in front of you all, because they know that it's not just about closing a loan for us and that dollar. It's helping Lifestyle International Realty grow, and therefore us growing with them and forming a symbiotic relationship. So it's not about one deal. It's about everybody's personal growth, which benefits everybody in the long run. And we'll detail out how we will assist even on transactions that we are not specifically a part of. Loan document checklist. And this seems to be off-centered, so I don't know how much of the screen that you all can see. This covers everything that we want to collect from a borrower when we're doing a loan for them. Now, that looks like a lot. And with our SMART system, we will be able to aid with those things. If it's a W-2 borrower, that system will tell them what they need to upload. If it's a 1099 or self-employed, the system will tell them what they need. As soon as I open up, I can see what's missing. Hey, this borrower is self-employed. We need this, and that needs to be uploaded. So this is more so about general information, and we'll detail those things out as we deal with the client, but it still gets them prepped in their minds on what's needed. And so we can have a smooth flowing transaction to get them to the closing table as efficiently as possible. The escrow survival guide. This is the Surepath 10 commandments, if you will, thou shalt nots. You will be surprised on how many clients do silly things throughout the process that kills their own deals. I one time had a client who cleared a close, and he bought a pickup truck because he wanted to pull up his new truck and deliver his new furniture to his new house all on the same day. and they did a check, and that killed the deal. Now, how frustrating is that for his wife? He's had movers already lined out. As me as a loan officer, as his agent, the seller of the property. So this communication right here is something that you can pass on. They can't say you didn't tell them. What I like to do is hand this to them and have them sign it and send it back to me. And make sure that they know that if they make these kind of mistakes, large deposits, or I had another person spend $4,000 before, and then he took cash and put it back into his account, and therefore his money was no longer sourced. So these things kind of go through everyone. You can go through every one of these, and they can have this, and this can be personalized. And we just are giving examples on things that you shouldn't do, that you can hand out to your clients, like I said, whether they're SurePath clients or not, to aid them in getting them to the table the most efficient way possible so you can get the deals closed. Then we can move up. You have the clear to close instructions, the checklist, things that need to take place. Make sure that your mortgage professional covers this information, that they've gone over the closing disclosure so that they understand that there's no questions at the closing table, when they need to have the money to the title company, all of those different things, so that, once again, smooth transactions. And we call this is our alliance bundle. Like, we'll send this out to you all so that you can hand this out to your clients so that they understand what's going on. Of course, we'll take my name and face off of it. Like I said, this is an example for you all to see how we will assist, and we will do this for you all as well. One thing I was rushing through because I wanted to get through and touch this. This is the Spreading the Love program that Jason was talking about earlier. We have listings that are maybe be sitting up, or really we could use this in any scenario where we're giving 1% back. Now we have to cap it. It's at $8,000. That can be used towards closing costs, towards buying down the rate. And so our promise to you is that we'll make a flyer for you. Then it'll just say preferred lender. You don't have to advertise us. You don't have to put your name, my name on there, but you can just, and Jason will give you the legal jargon and how everything is protected when we do it, so that you can offer this 1% back if they want to use your preferred lender. And if they say that they do and they need those funds, or will give an opportunity, then we will present ourselves into the transaction without interfering with what you have going on. But just know that open house special, that lender incentive from the preferred, is available to you all, especially if you have something that's sitting and not moving. We're willing to give that to make sure that you are able to offer something. And we are seeing traction on it. We started running this about 3 weeks ago, Jason?
Yes. Well, you're a little over a month, but yes.
A little over a month ago. And you'd be amazed at how it's helping to get some of these properties moving. Okay. So we're offering that to you all as our alliance partners. And then the last slide. And this is, once again, as an example. If you notice that George is the agent on here, and what we're doing is offering refinances. It's a reputable refinance, if you will. He's worked with George as an example in the past. Now he's showing us as a lender partner who will help refi and help them take advantage of these current rates. And so how does this benefit you all? Well, they're looking at you as not only the person that put them in their house, but the person that saved them $500 a month. We're keeping you top of mind, and it's more about you all than us. And as a promise, as an ally or an alliance partner, the funds that we use by doing these refinances for you all, we're going to help you to promote your personal businesses, your listings, whether it's sponsorships for LIR. So the money that we do on these refinances will go back into Lifestyle International Realty as well. So we want to offer this bundle of services. We have numerous different information packets, information forms that you can use as real estate agents. And we like to say we teach Mortgage 101 to Mortgage 902. And so it doesn't matter your level of expertise. You have newcomers, you have people in the middle of the road, you have people who have a lot of experience. But us joining our information together, merging as real estate professionals and mortgage professionals to get the job done the best way possible, it's a way for all of us to grow. And so therefore, we like to show that we're here to aid no matter what the situation is. There's different scenarios, and we call it a form. I forgot the name of the form, but it's really to show the quality of the buyer. So there's different scenarios. I won't go into them right now because we've been here for a minute, but I want you to remember that low down payment doesn't necessarily mean a bad borrower, but what it does do is it doesn't allow the wiggle room. So we like to analyze each offer. We like to look for appraisal gaps. We look for that wording in contracts to make sure your borrower isn't signing on to say something that they can cover the difference. So if they can't, then they can get their earnest money back. So we're going to weigh all those things and look at all the details for you, no matter whether we're the lender or not. And then inevitably, as you see that we are here for you, that eventually we will earn some of your business as well, although we never expect 100% of it, but we are your partners and we're your partners for life. And that's all we have. Jason, you got anything to take us out?
No, you guys hit on everything. So I think more questions from the groups. If anybody has any questions, if not, we'll give you the time back.
The only thing I would ask, if you all want a bundle list for that advantage, that competitive edge, just put in your group chat, or you can take down this email address. It's info@surepathlending.com. Once again, that's info@surepathlending.com, and we'll provide these different forms. We will personalize it for you all. You see the form that we had for George Canciobello. So if you all have any clients that you closed within the last 3 years where the average interest rate was 6.75 and you want to get back in front of them, let's put something together and let us do those refis for you, and then figure out a way that we can promote one of your other listings or sponsor something for you based on the movement. And the more volume we do, the more we're able to help Lifestyle International Realty grow. So there we go. All right, that's all I have on that.
All right. Well, thank you everybody for your time.
Thank you, everyone, for coming. I hope you all witnessed the wealth of information that we've all received from our SurePath partners. As you can see, they're just more than vendors. They're partners. They're here to pour back into you, pour back into your clients. Let's all work together, embrace them, leverage them. Any questions that you have in terms of clients, even pre-approvals, you want to shop your pre-approval, you want to shop your client, just understanding what they're actually getting. Oftentimes, especially with mortgage professionals, they tend to offer a rate that's, they say that's a low rate. And then when you get to the closing table, you see all these hidden fees and things of that nature. To prevent that from happening, give SurePath the chance just to take a look at those pre-approvals, those closing disclosures, so on and so forth, so you could be the most optimal professional for your client. Again, thank you, Jason, Daniel, as well as Benjamin, for being on a call. We really appreciate you. And thank you for all of our agents for taking time out of your day to, pour back into yourselves and learn about the mortgage industry. We really appreciate it.
Thanks, guys.
Thank you.
Take care.
Take care, guys.